Hey guys, what an amazing week. My goodness, the market's been a total roller coaster, presenting us with some great opportunities. And more on that in the next video. But right now, I really want to take some time to address what I believe is preventing a lot of traders from maximizing their potential. And so, in my view, the main reason that traders fail, and I work with traders all over the world on daily and weekly basis. So the main reason traders fail is this. It's the fear. And as you know, there's generally two things that drives human behavior and action. Number one is the fear of loss, and number two is the hope or the need for gain or pleasure. Now, here's the bad part. Unfortunately, the fear of loss is much stronger in most individuals than the desire or need for gain or pleasure. Look, guys, when it comes to trading, fear is your worst enemy. And generally in life, fear can be your worst enemy, but especially so in trading. So here's the main problem. Under the influence of fear, you will never be able to make best decisions as a trader. And that is actually exactly what you need. That's exactly what is necessary for you to become a successful trader, is being able to make best decisions in a timely fashion. President Roosevelt apparently might have been a great stock trader. The only thing we have to fear is the fear itself. In his famous inaugural speech in 1933. Check it out.
That the only thing we have to fear is fear itself. Nameless, unreasoning, unjustified terror, which paralyzes needed effort to convert retreat into advance.
Guys, please understand that fear is not real. It is a product of your imagination. It's a product of your imagination that makes you feel fear, driving your emotions to the max. And so to be a successful trader, this is exactly what you have to do. You have to eliminate emotions to trade successfully. What you may be thinking right now is, okay, well, how do I eliminate emotions? And so at some point in this video, I will share two specific strategies that you can utilize starting tomorrow to eliminate emotions and trade without fear. Now, before we do that, this is the time to get a reality check. Let's get 100% real for a moment. Okay, you should never be trading stocks or options with money you can't afford to lose. You should not borrow money from your credit card. Guys, think about it. After the introductory rate on your credit card expires, what typically happens? You're going to have a much higher rate, 12, 15, 18% in most cases. And the interest rates are in the rise right now. So some of you may be paying 20, 24% on your. I've talked to some traders that are actually borrowing money on their credit cards at these insane interest rates. They're absolutely brand new and they're trying to make, borrowing money at 15 to 20%, trying to make 100%. That's a recipe for disaster, especially when you're brand new, you have no clue what you're doing, okay? Because trading options is not a lottery ticket, guys. It actually does require a plan, a strategy. It does require some time for you to develop a skill, and it does require emotional strength. Now, these two things, okay, if you can't afford to lose the money, if you're borrowing money, from your relatives, if you're borrowing money from a family member, thinking, I'm just going to borrow the money, I'm going to go out there and I'm going to make a ton of money trading. Guys, it doesn't happen that way, okay? You should not be borrowing money. You should not be borrowing money from the credit cards, because if you're doing these two things right here, then surprise, surprise, no wonder you're so damn fearful about trading. So if this is the case, then you know where the fear derives from, and you have to stop. So instead of maybe having an account with borrowed money of 20, 30 grand, look, if you can only afford to trade with $1,000, then that's where you need to start. And point three is this. Anything that's worth doing in life is not going to be easy. Just if you decided to become a mechanic, if you decided to become an engineer, just think about it. Just because you made the decision to be successful at something doesn't necessarily mean that all of a sudden, once you make that decision, you're going to be successful the next day. So trading stocks and options, guys, there's no difference here. It is a serious business, And you should take it seriously. You should get all the kind of education you can possibly get in order to increase your probability of being successful at this. If you think you're going to start trading and become a millionaire overnight, you are 100% wrong. Now just think about it. If you're starting a business, you wouldn't expect that business to be successful overnight. Just because you made a decision that you're going to be a successful business person, that does not make you profitable in the next 24 to 48 hours. In some instances, people that are starting businesses, they don't become cash flow positive until the end of the first year, until the end of the second year. Some businesses, whether you may know this or not, Amazon was not cash flow positive for close to 20 years. It's in the last few years, it's actually starting to turn a profit. So why should you expect to automatically come in here without any education and expect great results? You should take the time to study. You should try to get as much education so you will have an edge, so you would be able to accelerate your trading career. For those of you that might have not tried to open a business, for those of you that this analogy may not make a whole lot of sense, I mean, if you're working for somebody, I mean, did you get your promotion the second day on your job? Did your manager, your boss came up to you and said, oh, well, man, you started yesterday. Let me go ahead. What are you at, $13 an hour right now? Oh, how about $20? Your second day on your job. Does that happen? No, guys, let's be real. Let's set realistic expectations. You have to build the skill. You have to acquire the skill. And eliminating fear, in my view, is one of the greatest skills that you can acquire and build as a trader. Let me share with you some of the very, very important things. And not only that, but share with you 2 simple strategies at the end of this video that you can utilize tomorrow to eliminate fear and trade fearlessly. First, let's understand the types of fear that most of the traders are experiencing when trading. Number 1, clearly, is the fear of loss itself. The fear of loss. Oh man, what if I take this trade and I'm going to lose? What's going to happen? Oh boy, I can't do that. I can't be losing money on my first trade. I can't be losing money on this trade. I can't be losing money on my 10th trade. Look, I can't take this trade. What if I lose? Guys, this is life. Okay, losses are going to happen. It doesn't matter whether you're trading stocks or you're opening a business, even when you're working for somebody. Take the same analogy. What if you're expecting a promotion and they promote somebody else? Isn't that a form of a loss? Here you are, you work so hard, you were waiting to get the promotion, and they promote somebody else to the management. Wow. So what, are you not going to go to work tomorrow because they promoted somebody else? Are you just going to quit and maybe just, that's clearly one of the alternatives. You can quit and you can go apply with some other company. But the bottom line is this: instead of doing that, how about focusing on getting better? Focusing on developing a skill, because that's what's going to get you promoted faster than anything else. See, we live in a production and performance-based society where it doesn't matter how it doesn't matter how much you talk. It doesn't matter how much, what this, what that. The only thing that matters is how much do you produce. Do you produce results? And so it's those that produce the most results. They do the best. And it's with business, it's with working for a company, it's with anything in life. And trading stocks and options, guys, is no different. So the second type of fear that most traders will experience is the fear of loss of profit. Now, this sounds a little bit confusing, but if you've been trading for at least a few days, you should know this. You're faced with decisions all the time. You're seeing your account now is in the green. Oh, man, I'm making $500. Oh, let me lock it in and get out of this trade. And what happens? Well, if you would just stayed in the trade just a little bit longer, you would have made $2,500. But guess what? You were so fearful. Oh, my account is in the green. Let me go and collect this cash now. Well, let me ask you a question. If you're going to do that every time your account just begins to turn green and you're going to try to run and collect that 100 and collect that 500, collect that 1,000, how on earth are you ever going to make $100,000? Look, I don't know about you, okay, but I don't have 100 years to try to chase this tiny little profits. Okay, if you've been following our channel, we're focused on some crazy strategies here on trading weekly options, generating returns 3, 4, 500% when the market environment allows us that. And at any point, we never take a trade that generates 20, 30%. Okay, we're just not interested in opportunities like that. So yes, we do swing for home runs, but there's also a strategy on how to let your profits run, which is going to be a story for the whole nother video. But for the purpose of this, just understand this: you're going to be faced with two type of fears. Number one is the fear of loss itself. Number two, the fear of losing just the very few gains that you're starting to grow in your account. You're so fearful of giving up those gains, what you end up doing is costing you the opportunity to collect some serious gains. So understanding these two fears is very crucial if you're determined to become a successful trader. Let's look at a couple of examples, okay? And maybe you can relate. Have you ever just completely missed out on an awesome trade because you were so fearful you didn't believe really it was going to work out in your favor? So you just kept staring at the screen, watching and thinking about taking the trade, but not taking the trade. And you just kept watching it and you kept watching it. And so the entire trade actually materialized just the way you thought it should. But guess what? There was one big problem with this. You never took the trade. So the solution is simple here, guys. Do your homework and take the damn trade. Here's one thing I'm going to share with you, and hopefully it's going to make a lot of sense to some of you guys. You cannot make money if you don't take the trade. Here's what I mean by that, okay? By doing so, you can only avoid losing. Can you imagine starting a business and then not showing up because you're actually afraid of failure, because you're afraid of success? What's the whole point? I mean, can you imagine accepting a job offer and not showing up? Okay, they agreed to pay you 60 grand a year. You're so fearful. Oh, what if I'm not? Oh, what if they don't like me? What if they, what if I'm not good enough for the job? What if I'm whatever? Just stop. By avoiding losses, guess what else you will avoid? Okay, look, by not taking the trade, you can only avoid losing. And it applies to both things, right? It applies to actual losses that could actually happen if you take the trade, yes. But on the other side, the bigger cost is losing the profits that you could have obtained as well. Now, there is a recipe clearly for avoiding bad trades, and you should have a process. And we talk about the process on this channel all the time, and a little bit more than that later. So just remember, by avoiding the trade, you're not just avoiding losses, you're avoiding the profits as well. Now, for most traders, it starts with fear of taking the actual trade, right? So most of the time, because they have taken maybe a few bad trades at this point. Maybe you can relate. Maybe you've been, on a good roll and then something happens and you've just taken a few bad trades in a row. Well, here's the important thing to understand. Your next trade actually has nothing, absolutely nothing to do with the bad trades that you placed before. And that's the beauty of this business. So you got to leave all the baggage behind, just like in a relationship, right? Okay, so maybe you've dated a couple of crazy girls out there. Okay, big deal. What do they have to do with an opportunity to hook up with actually a decent one, a good girl, right? So you can't just, come into a new relationship and, use your old baggage, because all that's going to do is what? It's going to run off the good person. So why would you want to do that? Why would you want to sabotage the good trade you're about to take? Now, many traders have had a few unsuccessful attempts sometimes to trade a particular ticker symbol, a particular stock. I mean, let's just think about it. I mean, maybe a CMG, Chipotle Mexican Grill. Maybe you've taken the trade on the short side and things keeps going higher and higher and higher. Well, you probably overlooked the fact that all the restaurant stocks, including McDonald's and everything else, they've been going higher. So by analyzing the sector, you could have avoided continuously shorting that stock, thinking, oh, everything is still crashing, right? What about TLRY? Right, the thing looks like it was crashing. Then it looked like it was going high. Then it was crashing again. And boom, look, there's a chance. You've been trading TLRY. You've taken a few bad swings. But look, it's announcing earnings next week. Does it mean you should stay away from it just because maybe you lost some money on TLRY this week? No. It's a new week. It's a new trade. And all you've got to do is focus on the process that's going to help you turn it into a good trade this time. So here's the thing. Here's what some of the traders say after they had maybe multiple trades in a particular stock. Doesn't matter. Apple, Amazon, whatever, TLRY, CMG. Who cares, right? That's not important. What's important is after a trader takes a few consecutive trades unsuccessfully on a particular stock, oh, hell no. There's no way I'm taking another trade on this damn thing right here. Forget about it. And so just as they say that, guess what takes place? Well, the stock presents an insanely priceless opportunity that unfortunately now the trader is missing out on. So don't let your prior bad trades prevent you from taking the good trade this time. Now, let me just, and this may not be the best example, but here it is. Can you imagine if every time you get behind the steering wheel of your car, an SUV or a truck, if you just keep thinking, oh my God, I don't know if I should be driving today. Jesus, I know I got to be going places. I got to drop off my kids at school. I got to get to work. But, something just tells me to just not drive today. I should not be driving today. I should, what if somebody crashes into me? What if I crash? Do you guys do that every day? Now, I can understand if, this would be a bad example if somebody might have just been in an accident and so they have to overcome the fear again to get behind the steering wheel. But for the most part, right, even if you had some accidents back in the past 10, 20 years ago, right, it has no impact on what you think when you get behind the steering wheel today. Everybody drives in this country. We have to get in our car to be going places. So, you don't think about it. Oh, what if I'm going to crash? What if this is going to happen? What if this is that? Oh, no, I'd better stay home today. No, you get in and you go. Why? Because, that's what you do every day. Because it's a habit. It's something that you don't think about. You just get in, you turn the key in the ignition, you put your seatbelt on, hopefully, and, you continue from there. It's that simple, right? So trading is no different. Once you understand the process, okay, this morning, I'm looking at this, I'm looking at that, I'm making my decision if this takes place, I'm not taking the trade if this takes place. If you understand the process, then it's no different than driving your car every day. So why is that you don't think about it when you get into your car? Well, it's because the process is so simple. So your trading stocks and options process needs to resemble the simplicity of the process. And if you have not taken our chart course yet, it's 6 divergences that we'll look at in the charts. It is 3 top chart patterns for shortened stocks to profit when stocks drop. You don't have to be a rocket scientist. Once you understand, you apply the material, it should be just as easy as driving a car. And you should be able to look at the chart within 30 seconds and determine if there is a trade worth taking or not. You should be able to do it automatically. Here's the deal. It's the fear itself that stops you from succeeding. How many times, have you taken a trade that was a great trade and you jumped out of it? Just looking 2 days later at the stock thinking, oh my God, if I would have just stayed in this one. If I just hang in there in this trade for 2 more days, I would have made extra 10,000, 12,000, 33,000, 100,000, whatever the case might have been in your particular situation, right? Can you relate to this? Now, if you getting out of the trade was calculated, then it makes sense. But if you were just making an emotional decision to get out, and it was just a spontaneous decision based on emotions, you shouldn't be finding yourself in situations like this in your trading. It's all a simple matter of calculating things before they take place and then understanding what you're going to do if they take place. A little bit more on that in just a moment. Here's some of the solutions. Stop creating horror movies in your imagination before taking the trades. You should have no time for doing that if you focus on the right things. And what are the right things? Well, the right things to be focusing on is the process. And so our process, again, it's identifying 5 reasons why you're getting into the trade. You should be able to take a look at the charts for confirmation of bullish or bearish divergences. Check out the rest of the stocks in the sector and their charts to arrive at some more clues whether your trade has significant validity or not. Study the possible reversal in the current trends or the market environment. If you've been looking at some of our videos on this channel, you know we've talked about TRO, or in other words, trend reversal opportunity. See, why do you think so many people lost money in the stock market in October that we just finished, October 2018? And why do you think our subscribers have taken some of their accounts, believe it or not, from 25,000 to 300,000, from 25,000 to 400,000, from 10,000 to 80,000. Guys, do you think it's a coincidence? No, it's the process. It is the process of being able to identify these trend reversal opportunities before they actually take place. And so if you're not doing that, then no wonder why oftentimes you may be terrified, you might be fearful, because you don't have the stuff calculated. You're not expecting what will be the market's next move, and therefore, if you're not expecting the next market move, how can you calculate your reaction or what you should be if the market does a certain move? So most of the people, they focus on the trend. Well, the problem with focusing on the trend is the trend could make you a little bit of money, which is fine, I guess, for some people. But if you're trying to turn this into a career, it's important to identify the TROs, or the trend reversal opportunities. And so if you get better at understanding on why you're taking the trade, you will better execute and manage the trade. If you don't understand the trade, the rule is simple. If you don't understand the trade, don't take the damn trade. Right? If you don't understand if this process right here, if you can't identify 5 reasons why you should be taking that trade on the bullish or bearish side, don't take the trade. If you don't have clear signs from the charts and confirmations of a potential reversal, and the reversals is what we focus on because those are the type of trades that make you the most money. Okay, if you don't see clear confidence, don't take the trade. Okay, and check out, if you checked out the rest of the sector and it's still not giving you much signs on what could be happening next, then don't take the trade. If you study the environment and the current trends, and it doesn't give you a clear picture of what's going on, don't take the trade. So in other words, don't be taking a trade if the odds are against you. Now, how would you identify that? See, clearly, if you're just making decisions on taking trades based on what you hear on Bloomberg, based on what you hear on CNBC, based on what you read in Wall Street Journal, there's no process there. You're just reacting to the news. Well, here's the truth that most of you probably don't want to hear. By the time the news comes out, it's too late to take the damn trade in the first place. So if you're finding yourself in situations where you're actually taking the trade when everybody in Wall Street, and what I mean by Wall Street is the institutional investors, they might be considering getting out of the trade, and that's oftentimes when you're trying to consider getting into the trade. In other words, you're trading with the old news. So if you don't have a process, you need to get one. What you need to do is click the links below this video and take action now, so you wouldn't trade another day without having a process. Now guys, I promised you at the end of this video, I was going to share with you 2 strategies that you can use tomorrow to trade without fear. So here's number 1. If you can't sleep at night, guess what you need to do? It's very simple. Cut your position size. So if you're carrying maybe 20 contracts in a particular stock and you got, half of your account in that trade, no wonder you're fearful. Cut your position down. It's that simple, guys. Instead of taking 20 contracts, you probably need to be taking 2. And if you're trading 2 and you still can't sleep, then cut it down to 1. A lot of your fear, a lot of your emotions, they're going to play games with you. And oftentimes that happens when you don't trade with the right position size. So cut down your position to where you're not worried. And guess what's going to happen? If you're not worried, then you don't have all these emotions weighing at you, wanting you to jump out of the trade when you need to be adding to the position. You don't have all these emotions attacking your clear view on what needs to be taken and how you should be reacting with a clear head. So in other words, the position size is going to intensify your emotions. And you don't want to be taking trades or responding or managing or executing your trades based off your emotions. You want it to be a calculatable outcome. You want to take a calculatable action. You want it to be more of mathematical, simple solution rather than an emotional decision. Okay, number 2, before you get into any trade, understand the outcome. And you will never know the outcome of the trade until you take it. You have to be prepared for the trade to go exactly in the opposite direction. You're going to say, well, I'm going to lose money. If you are a trader, you're going to lose money at some point. If you're a business owner, at some point you've either lost money or you will lose money. If you do anything in life, at some point you will lose. The question is, if you have your response to that loss calculated in advance, you're not going to be panicking. You're going to be able to make the best possible decision. Look, guys, it's just like playing chess. If I know my opponent's next move, I can already calculate in advance what my response to that move is going to be. So when you're taking the trade, there's going to be clearly 2 results. The trade is going to go your way and you're going to make money, or the trade is going to go against you and you're going to start losing money. So knowing how you will respond in either situation is important. If the stock goes high by $3, what is your response? If you get into the trade and the stock drops by $7, what is your response? See, you need to have these questions answered before you actually pull the trigger. You have to be able to face the outcome of a loss. You have to understand how much of a loss you're willing to take. Because if you are a trader, and I don't mean those guys that trade with paper accounts. Trading with paper account is totally different because you don't have the emotions applying the pressure in your decision making all the time. So it's important to trade with a live account. You don't have to trade with 20, 100,000, or 500,000. You can trade with 1,000, but you will be experiencing the real emotions because you will have real money at stake. Have a plan. Understand, regardless of whether the trade is producing gains or it's producing losses, what is your reaction to that going to be in advance? And if you understand that reaction and you calculate your reaction dependent on the move of the stock ahead of time, then there will be no fear because all you're going to be doing is executing a plan. And it doesn't have to be complex. If you're looking to learn more about charts, there's a chart course you can actually take. Identifying the divergences is going to help you with the process and selecting trades. So you're not just basing your decisions out there. Oh, well, they're saying on CNBC today, that looks good. Let me go ahead and get some of that. Guys, that's not a process. Click the links below this video. You can schedule a 20-minute free coaching session with myself or a senior trader here and get all your questions answered about trading stocks or trading options. Guys, the markets are absolutely amazing right now. We still got close to 2 months left in this year. If you're not having the best year, I want you to challenge yourself to make this year your best trading year ever. Take action now. Click the link below. I'll catch you in the next video.